So, client wants to know, how do I handle taxes if I run my business from multiple states or countries?
Countries is a whole different thing. Let's talk
Yeah, I
about
was going to
multiple
say that.
states first. Wherever you're doing business, you have to be registered. So if you're doing business in three states, you got to be registered in three states. And then you apportion the business activity. And there's a couple different methods, but the most common one is the three Ps: profit, property, and payroll. So you weight your activity by those factors, by how much money is generated in each state, how much property, so equipment, warehouses, that kind of thing are in each state, the value of those things, and how much payroll as far as the if you have employees in different places. And you'll come up with a weighted factor for each state of how much of the net profit federally gets applied to each location. And then you're going to pay whatever local tax rates are based on that. So for countries is that is maybe the ultimate it depends question. A company is a legal entity, and that means it exists within a particular legal jurisdiction with a particular legal framework. Even though you could say, oh, we have a foreign subsidiaries, maybe. It depends on who owns what. It depends on the particular structures in those foreign locations. It depends on the flow of control and the flow of funds. So it's impossible to say how that all is going to work because there's just too many variables. That's why you need professional advice in each location because we have clients who are foreign who have US entities. We only do the US side. And we can say, okay, here's what's true here. No idea how this applies to you over there because I'm not an expert in Brazilian tax law or whatever. We can do all the correct flows as far as things here, as far as things are in the US. So in the US, because the US, let's just take it back to the individual level for a second. Sometimes people get jobs in foreign countries. And the US, you are required to pay US taxes on worldwide income. And that is not commonly true throughout the rest of the world. So most other countries only tax income in that country. So if you go to the UK and you have a job there, then you're only going to get taxed on UK income in the UK. But in America, you're going to get taxed on US income and you're also going to ta get taxed on the UK income. So to somewhat deal with that, there is this thing called the foreign tax credit. And what that does is it calculates is okay, let's say you had $100,000 worth of income from UK sources and you paid $40,000 worth of taxes in the UK on that 100,000. And the US government will say, okay, we recognize that you already paid taxes somewhere based on that income. How much credit we're going to give you for that is going to depend on how much total income you have and the character of it and all this kind of stuff. If you are on the lower side of the income, you'll get full credit. As you make more, they give you less and less credit for those taxes that you already paid. So that's always fun. Now, in the corporate world, things get more and more complicated with controlled foreign corporations, GILTI income, GILTI, global intangible low tax income, subpart F, and it's just the universe explodes with all the different things that could happen. Yeah, you're going to get taxed on your foreign income one way or another. If you didn't pay it there, you're going to pay it here. If you paid it there, you still might pay some more here. And it just depends on the numbers and the structure involved. That's
It
that.
depends, guys.
It depends. I could talk about that for 2 hours, just that one topic. We'll call the simplified explanation there.
Understood. We have another tax planning question.